Hello, traders. Good morning. Welcome to another exciting section on our money market review. My name is Emmanuel. So I trust the month has been so good for us. So this is the last month of the year, and of course, complement of the season. So everyone here, I hope trading has been good for you, right? You have been trading profitably, stop loss, take profit, trend direction, all of that. So guys. Yeah, my name is Emmanuel Udogu. Guys, the market will continue to be with us. So yesterday I was here, we did money market reviews, and today I'm here again. So it's beautiful, guys. Beautiful, beautiful to see you guys once again. So let me know if you can hear me. Get to the comment section. Let me know if you can hear me. So this is a money market review. We do this every trading day, guys. One solid hour of market analysis. Our aim is to give you tips and tricks, right? How you can navigate the market profitably and make good money for yourself, guys. This is the season. You have to position yourself profitably to make good money for yourself, to make this year, to make this festive season a good season for you and your family, you and your loved ones. So, guys, so some of the analysis we did yesterday, we are going to review it, right, and look at what really happened to the market if you took those positions, and of course, what happened to your trade, how did it turn out, because we promised to give you previews of what the market has done. Once again, Emmanuel here. So guys, I will just share my screen real quick right now. So you guys have confirmed you can hear me. Beautiful, 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 guys, beautiful. So I think I would like to do plenty of analysis for today. Most of the time, what I do is I stay long on the first instrument, usually Euro USD, analyzing it for you, not just analyzing it, teaching you how the analysis is done, teaching you how to spot the trend momentum, trend direction, right? And of course, if there is a trade, we pick trade immediately. If there is none, we do what we call waiting. Of course, waiting is trading, guys. So, and then of course, the rest instrument will just try to look at for trade signal, trade direction, and all of that. Okay. But then for today, I will just try to maybe look out for trade signal because so many instruments. Like I'll like to start from Euro USD and GBP USD. Then afterwards, you can now tell me the instrument of your choice, right? The instrument you're looking at, we analyze it together. Yesterday, someone mentioned we should look at AUDJPY, right? I can remember, and we looked at it, we analyzed it, and today, if you are see that person is here and see on that tree, we are still going to look at it and see how it turns out to be, right? So we're not just analyzing and leaving it. No, we're analyzing and taking action and owning it, right? It's not just living, we are owning it, right? And yesterday, someone mentioned we should look at US 100. We did, right? Did we look at gold yesterday? So, okay, so let me just do, uh, excuse me. So, Forest Factory quick. So, let's go to Forest Factory. So you just go to your browser www.forestfactory.com, but then now you'll be using mine, right? So just you may not don't bother to open your own, right? Just use my own. So just use my screen. So let me share my screen real quick, guys. Stay with me, guys. So I've been able to share my screen. This is forestfactory.com. So yesterday we saw a lot of move on the market, right? We saw the CPI, right? CPI from affecting the dollar. We saw that, and of course, I think it came out bad, right? Bad for the dollar. So we saw the gold, right, skyrocketing to the upside yesterday. We saw US 100 indices pumping upward. So we saw all of that. At the same time, we had, I think, one fairly good news on the dollar, but then the CPI is stronger, so that was why the market moved upward. So, guys, for today, that's for yesterday, I mean, okay. Then for today, we have the Bank of Japan policy rate, right? That one has already been released. That's their rate statement. Of course, it was actually increased, right? I think this is 25 basis points. 0.5. So it was forecast to be 0.75, and of course, actual came out to be 0.75. You can see over here, 0.75. Okay, so that means they are very confident about the economy, right? Then, of course, the rate statement also at the same time. Of course, we have BOJ press conference that one's already gone. Then we have retail sales affecting the pounds has already been released, right? Retail sales on the pounds has already been came out bad for the pound, so we're expecting some weakening on the pound. So we're going to look at it. Then, of course, okay, the rest of the day we don't have any high impact news again, except for core retail sales on Canadian dollar and retail sales on Canadian dollar. That will be by 2:30 p.m. So, guys, even though it's medium impact news, we should be expecting movement, right? And of course, we have existing home sales, and of course, University of Michigan consumer sentiment. So we have consumer sentiment, revised University of Michigan, right? That's the UOM, their consumer sentiment. It's also a medium impact news by 4 p.m. But you know what? It's still going to move the market. Still going to move the market. So guys, keep your finger crossed. 2:30 and of course 4 p.m. So guys, okay. Okay, so let's jump straight to the chat. Let's jump straight to the chat. I would like you guys to really engage me for today, right? Engage me very well. Ask questions where you don't understand. And of course, even where you understand, still ask questions. So, guys, let's switch over to the chat. So, I'm switching my screen right now. Yeah, I've been able to do that. So, guys, this is my screen. So, let's start from Euro USD. Let's look at what happened to Euro USD yesterday. Are you guys with me? Okay, so I took this analysis yesterday, so I will just do a little review of what happened yesterday, so that some of you guys will start trusting this analysis we do, right? Okay, so let me know if you guys are with me. Okay, okay, first 2 seconds. See you there, you're with me. Mr. E is not here. Mr. E. Jesus, I can see you Sunday. Okay. Felix, thank you very much. You guys are wonderful people. Mr. Alebode. Or should I just call it Bode? Say I should review coffee. It's like you trade coffee, right? So just a review of what happened yesterday. So on Euro USD, I think this red line, this shaded red portion, right? I think the market was around this area, and we said if the market breaks to this area, you're going to take a sell. So taking a sell from this particular point would have given you this amount of pips, right? That's about 27 pips, guys. 27 pips is good profits, man. Good profits. So let's just say you're not too patient for 27 pips, you're able to get just, is this 27? Okay, no, this is 23 pips, right? So let's say you're able to get just, even if it's just 20, right? 20 pips, $1 per pip, that's about $20. $20 is, man, around 30,000 naira, right? But if you're trading $10 per pip, $10 per pip, uh, if you're trading $10 per pip and the market is able to move by 20 pips, right? So that's about $200, guys. $200, good money, man. So, but then if you're trading $1 per pip or you're trading $0.1 per pip, okay, guys, so you understand that. So that means I think the reason why we do this portion, we said the H4 time frame is actually on an upward trend. You remember? Yes, we said the H4 time frame is on an upward trend, but then you can sell on, we say you can sell on a retracement, and then the market is still experiencing a retracement. So to do that, we said you move over to 15 minutes time frame, right? Okay. So after that movement, this is the news. So this is the news. So the news actually caused this spike upward, right? So it is the news that it came at negative, right, for the dollar. So we got this movement upward. So this other movement is the news. Remember, we said we are looking at reviews of what the market have done. So this one is what the market have done already. So the market was able to move about 48 pips, right? So the news pushed the market 48 pips. But then, if you had already taken a sell, you should have close your trading profit or protect your profit, right? Of course, by that means, you should have taken this trade. You should have taken this trade. So if you watch carefully, you will notice. Let's do something like this. This whole move is the news, right? So let's do something like this. So you can go see first 15 minutes, second 15 minutes, third 15 minutes, fourth 15 minutes. So you should have jump in at any of these 15 minutes and make that profit. Then afterwards, you notice the market reverse downward because it's still experiencing a retracement. So we are still on the retracement of this movement. Okay, so the market is still experiencing a retracement. The question will now be how much retracement would be a good retracement? Man, I like asking that question. So if you're hearing it for the first time, wisdom demands that you write it down. How much retracement is a good retracement? That means when is the right time for me to jump in? When is the right time for me to now enter to continue the trend? So how much retracement is a good retracement is a wisdom that cry on the top of the roof, and of course Fibonacci answers that wisdom. So the answer to that is Fibonacci. So you use the Fibonacci and you draw the entire stretch. You draw the entire stretch of the impulse. So this leg from this is the point A of the impulse. Oh crap! What did I pick? Okay, sorry about that. So you draw the entire stretch. So this is the point A of the impulse. This is the point B of the impulse. So you take it right to your right hand side, right? So guys, I hope you guys are following me. Okay. So the market have dropped up to 38 points. So that's a strong point. So that was why it bounced off from there. Now it's digging deep. It has touched 50%. So I think the strongest point for us would be around 61.8. So that is 1.8 will also be coinciding with this our previous resistance. So if you look at the left-hand side, you see a point where the market might need to mitigate, right? The market might need to mitigate this level, right? So any other movement lower than this level, man, guys, watch. I'm already doing another thing again, right? So when we meet again in another money market review, we'll see how the market have reacted to this level. So I'm expecting the market to react to this level. And this level is around our 61.8, right? So any further movement below this 61.8, man, is most likely this our strong low. Remember strong low, right? This our strong low will be taken out. So if the market trade below this level, most likely our strong low will be taken out. And if our strong low is taken out, then we have experienced what we call 4 hours market structure shift. And of course, if the market structure have shifted on the 4 hours, it means hey, Euro USD on the 4 hours will start going downward. But for now, it's still looking very bullish, right? On the 4 hours time frame. So, guys, I'm still expecting more movement downward to test this level, more movement downward. Okay, for the 4 hours time frame. So I will now need to go to 15 minutes time frame. Me that say I will not stay long analyzing it. Man. Oh my god. Okay. Am I staying long? But then you need you need to get value. You need to get value. So guys, I'm expecting that further movement downward, right? I'm expecting it to dump downward. But then on this 15 minutes, I remember 15 minutes is very vital because guys, you are a day trader, right? You should follow with 15 minutes, right? Follow 15 minutes. So 15 minutes has more detail. Remember, they say the multitude of counts, there is safety, right? So the multitude of information. So the reason why we are coming down to 15 minutes time frame is because of the 15 minutes time frame or at the lower time frame, where we are going to be seeing a lot of brown. I can see your comment there. So at the 15 minutes time frame, we are going to be seeing a lot of information, a lot of candles. Right? When we say the multitude of candles, we mean the multitude of candles. Did you get that? Now let's relate that to trading. In the multitude of candles, you take the right trading decision. The multitude of candles. That means the more candles you have, or the more information, right, about the market, structure, and of course you get to see and understand what the market is doing. So guys, on this 15 minutes time frame, we are seeing that I'm expecting a drop to this red area. Don't forget, I said I'm expecting a drop to this red area because this red area, this shaded portion is my draw on liquidity because the market has to be drawn to that particular area. So that area is also my area of interest, my area of interest. So I've gotten an area of interest. Now, gotten from the 4 hours time frame, don't forget, gotten from the 4 hours time frame, which is a predominant time frame. But the challenge I'm having here is that on this 15 minutes time frame, I can see some localized support areas where the market has to go to. You know, now if you look at the left hand side, remember you get enough information from the left hand side of the charts. In fact, trading analysis is done on the left hand side, execution is on the right hand side. Guys, if you're hearing for the first time, pick your pen and your paper, write it down. Trading analysis is done on the left hand side of the charts, execution is on the right hand side. So whenever you want to pick a trade, you have to look at the left hand side. Left hand side, the market got to this point, top twice, right? It could not go lower. Then, of course, it got to this point again, it could not go lower. Then the same things happen here. So that's why I call it a localized, or if you like, a local level of support, right? So this is what may prevent it from going downward. Now, whenever we have a level like this that may prevent it, usually what we may have is an outright break or a retest. It will bounce it off, then of course gain more momentum to go down, right? So something like this. But usually in analysis, traders only expect one-way movement. And I think that's actually a challenge to most of us, myself inclusive. Uh, Traders only expect one-way movement. By one-way movement, I mean if it's going down, they expect it to just go down straight, forgetting that hey, the market needs to breathe, just like a human being needs to breathe, right? So that breathing is the retracement. It retraces, then of course gain more momentum to continue. So guys, this is what I'm expecting, right? I'm expecting something like this, or if the momentum is high, it can break through. So therefore I'm expecting further movement to the downside, right? Further movement to the downside. So that movement to the downside may be occasioned by a little retracement before going down. So guys, I've given you my idea, my trade direction on instrument European Euro versus United States dollars. So let me go to GBP USD. So that means on this one, our signal is waiting, right? Guys, waiting is a signal. Oh my goodness. So let's look at GBUSD. So on GBUSD, guys, I think we analyzed this one yesterday too, right? So on the H4 time frame, let's look at it again. We have a lot of whipsaw yesterday. Whipsaw means up and down movement, the one that can be hungry for stop loss. Even though when he's hungry for stop loss, he can equally be hungry for take profit. They are both liquidity, right? Don't forget, they are both liquidity. Stop losses and take profit are both liquidity. The market is very hungry for those two because the market needs movement that will make it, that will take it to where it's supposed to go. So, guys, for yesterday, let me just if you look at this particular chart, it's looking a bit funny. Now, this is where the week opened, right? This is where the week opened. So what we saw yesterday, we saw because of the news, right? So this particular candlestick is the news candlestick. So we saw a drop, right? So we actually highlighted this area, right? We highlighted this red portion, right? So we saw a drop. Let me do let's do 15 minutes time frame. So what we saw here yesterday is we saw a drop, right? When the market was trading just it dropped into this area. Then from here, because of the news, it actually spiked and picked up from here. So this was the effect of the news. But if you notice, it dropped to this particular area, right? This shaded portion. So whenever we draw a shaded portion like that, you have to pay close attention to that shaded portion. So most of the analysis we do here is most times you see us using rectangle, right? To shade a particular area, it can be of any color, and then we explain why we're shading that area. The reason why we're shading that area is because that area is area of interest, right? We normally expect what we call market reaction at that area. So this is what happened here, right? So the market could not break to this area. Therefore, what happened? It went up because of the news, right? Because of the news. Then you notice it actually came back again to bounce off this particular area. So if I'm to expand this left-hand side into the future, so this will happen. That means right now the market is actually battling this same previous level. Why is it not getting smaller? This same previous level of uh, resistance on support, right? So the market is on a support. So my bet is remember we are trading below the opening price and the candlestick are fanning. So I am saying the market may continue going downward for GPS. So for GPSC, I'm expecting a downward movement, right? I'm expecting a downward movement. I'm expecting a downward movement. So there is a small level of localized support here. So if that level is broken, I'm expecting a downward movement. So guys, as a blanket statement, both Euro US and GPUSD, I'm expecting some kind of movement to the downside. So I think we are done with Euro USD and GPUSD. So let me get to the comment section now and entertain your questions. So questions can come in now. Um, Question can come in, the instrument you are trading can come in, the one you're looking at can come in. Let's look at that AUDJPY we looked at here yesterday. You remember we saw AUDJPY. We got someone that said we should analyze AUDJPY. Okay, we actually also did USJPY, right? Okay, since I've already opened USJPY, someone made a request on USJPY and GBPJPY. So guys, I hope you like what I'm doing. There are instruments we analyzed yesterday. We are still going over them again, right? So that you start trusting this analysis, right? So that you know it not be like you just analyze and leave them. No, you analyze them, go back to them and say, hey, look at what we said, look at what has happened. So as at yesterday, this is yesterday. You remember when I said the market is has formed a pin bar, right? Who can remember that word, pin bar, yesterday? We looked at USDJPY on a weekly, we did weekly time frame, right? Was it weekly or daily? We saw a pin bar. We saw a pin bar. Is it on weekly or daily? I think it's on daily. Is it daily? We saw a pin bar. Hmm. Okay, that pin bar was actually at the time of the of the analysis, right? So which the market must have progressed beyond that level. I hope you understand what I'm talking about. And as at that years, it was a bullish pin bar. That means it's bullish in nature, right? Uh, so if you watch what happened yesterday, right? So what happened yesterday was the market actually came down to take out this liquidity, the liquidity of the day, right? It's also the Asian liquidity. Clear out this liquidity and start moving up. So of course, we already said it's a bullish pin. And of course, if you look at it very well, the market is already trying to move upward. Okay? So that was a buy signal start yesterday, and today it is still buying. In fact, dangerously buying, as you can see. Getting to the roof. Dangerously buying, dangerously buying. So if you look carefully, you see this is a very strong upward trend. So guys, wait a minute. As at yesterday, was it already an upward trend? Of course, we've already seen what we call change of character, right? A shift in market structure. So this is actually a shift in market structure. The market trading above this high, it has caused a shift. That shift is the beginning of a reversal. So already seen that already. We have already seen that even before this day, right? We've already seen that. So this market is dangerously going up. So what can we do? Okay, so should we jump in with a buy? Before you jump in with a buy, you want to measure how much has the market moved up already. So the market has already done 104 pips, guys. The market has done 104 pips. So guys, with 104 pips, are we still going to jump in? Of course, with 104 pips, the market has really gone far, right? But USJPY can do up to 150 pips, right? And sometimes when it's crazy, it can touch 200, but I don't think it's going to touch that. It has already done on 100 pips. So you want to look at the average daily range, right? The average movement of the day. So this day it was how much? This day it did 122, right? So you understand where I'm coming from now. This other day it did what? You can see 80. So the market has done. So what we are seeing right now is what the market usually uh, uh, is not a common fit. It's not a common fit. So this day was 121. So you can see, so even if you measure the previous day, you notice that the market has the movement we have seen, this 113, the movement we have seen. Okay, let's look for a day that was really a day. So this day was what? 119. So you can see, I've gone back to 2 weeks ago, 3 weeks ago. We have not seen, okay, let's look at this day. This day will get up to maybe 150. Let's see. Man, I'm correct too. Let's say I'll be prophet too. One, okay, not 149 pips, right? 149 pips on this particular day. So I told you USJPY can do 150 pips, right? So that's 149. So guys, for today already, as at the time of this analysis, right now, I mean, the market is okay. Think okay. The market is already doing 100 and something pips, right? So that means this market has gone far. So if you enter with the buy, it means, guy, the market doesn't have too much movement upward again. For today, maybe it has maybe another less than 30, less than 50 pips again before it will start retracing. That retracement does not mean trend that change. So because most cappers just want to take that profit and then go. Okay. So, but then if you want to continue this trend, because this movement is going to take some time. So if you want to continue on this particular movement, we will need to wait for a retracement and enter, right? So you may need to wait for a retracement. The market should retrace, maybe retrace to this level, this level. Oh, sorry. The market should retrace to this level, this particular level, this one. They enter. So if you drop that to 15 minutes time frame, we'll see more information inside there. Okay. So you see why 15 minutes is very important. So the market should retrace further down. It has done that retracement already, but that's not enough retracement. So the market should retrace. Oh goodness. So the market should retrace further. So the market should retrace further to this level. So if you want to enter, eh, and make more profit, wait for a little retracement. But if you enter now, that is you're actually buying at the premium price. Okay, there was a time I thought about premium, buying at the premium price and buying at a discounted price, right? So you understand that, right? Buying at the premium price is high risk, buying at the discounted price is low risk. You remember, right? Buying at the premium price and at the discounted price. So I think okay, I'm looking at the comment section right now. Okay, I think I wanted to go to AUDJPY, man. Okay, let me see what happened to that AUDJPY. I don't think we have Mr. E here, right? Mr. E. Let me just look at that AUDJPY, the one we looked at yesterday, and so this is AUDJPY. Let's do something on it very quick. So this is AUDJPY. So this is that AUDJPY. Mr. E had a buy on it yesterday, right? Okay, so as at that yesterday, this is where the price was. So the price was actually testing a resistance. So this is the resistance the price was testing. Some of you that joined yesterday, right? So this is the price the market was testing, right? Then we said on the uh, we said on the 4 hours time frame, the market, the big money, the pension fund, leverage fund, they are looking at this market with an upward eye. I mean, upward trend. I mean, and the market is actually fulfilling that, as you can see, it's going up, right? So all of this was actually a retracement. So as at yesterday, on the 15 minutes time frame, we said, hey, I think the market was somewhere around here when we were doing the analysis. We said, hey, if you're a day trader, you don't want to enter buy immediately, right? Because the market is working against that. You may need to wait for a retracement. But if you're going to hold the trade for a longer time, you can leave that back. And guess what? Market did retrace, right? Okay, I remember yesterday we do something like this and we said the market is on a range. If you can remember, some of you can remember, right? We said the market is on a range, right? Some of you can remember. And we have this also recorded on YouTube, right? So it's on the range. So this is actually where the market was. So what happened here at this resistance? If you notice, the market moved downward, right? The market moved downward at the resistance, moved downward. So after that movement downward, you notice it actually went up again. Now took out this resistance and then start going up, guys. Okay, so this is yes, yes, it's very bullish. So let's look at some of these instruments you are uh, telling us to look at. So, Mr. Sunday, you have the opinion we should consider CAD JPY. So let's go to CAD JPY. CAD JPY. So, guys, this is CAD JPY. So what can we do on this one? On this one is very bullish, right? So just look. You just need to look out for opportunity to buy, right? Opportunity to buy. That means a little retracement you can enter. A little retracement you can enter. So then Kajepo. So this is Kajepo, Mr. E. No, Mr. E is not here. Card Mr. Sunday, right? Card JPY. So guys, this is card JPY here. Card JPY is also dangerously very bullish, right? So that means Japanese yen is actually weak, right? It's as a result of the news on Japanese yen, right? It's making it very weak. So I think the same thing should be affecting GBP, JPY, right? The same thing should be affecting. The same thing could be affecting GP, JPY. So it's same thing. So looking pretty much like ADJPY. So guys, this is actually our level of resistance, and this is actually our pretty much the same kind of movement. It's not different. So what can we do? We are not going to enter. We are not going to enter a buy. This thing has come up very much. Okay? So if you enter a buy, the problem in entering a trade when the market has done something like this, what we're seeing right now, is because if you enter a trade, the market gives you small profits. That small profit might be somewhere around here, right? The market just moved from here to here. The market has overstretched. The market has already entered what we call uh, overbought, right? At that point, the profit will be too small for you. Be expecting more movement to where the market has overstretched. So, man, you just start seeing some kind of retracement. So, for your own safety and peace of mind, whenever you have seen an expansion, right, that has stretched so much, you just need to stay out or wait for a retracement, right? Or you place a buy, put a tight stop loss, because if the market retraces on you, that may not be good, right? If you retrace on you, that may not be good. So if you have a buy already, right, and you're swinging the market, you'll leave that trade running, okay? Don't close it. so that you can enjoy all the profit. You can bask in all the profit that you can. If you have a sale, right? And the thing is stretching you out, man, your stop loss should be your savior right now. Salvation is in your stop loss. All right. So I think that's Sunday. You said we should look at KJPY. So this is KJMPY. So this is the analysis on KJPY. So Mr. Femi, you're saying AUD could sell, could sell. Yeah, that's the retracement now. So one thing with an analysis is you need to understand the language of the other person, right? So when you say sell, you mean a retracement. You mean a retracement. Is that what you're calling selling? It's a retracement. So we expect the retracement. Okay. So any other instrument that we should look at, I think we have done currency enough. Let's leave currency for a sec. Are you with me? Are we leaving currency, guys? I think yesterday we also looked at US 100, right? So for today, nobody have mentioned US 100. So yesterday we looked at US 100. So as of that yesterday, I think this is actually the chart we used for yesterday, right? Come on, guys. This is the chart we used for yesterday. I was able to make this thing very well yesterday. Some of you, I'm sure you made some profit from this particular instrument we analyzed yesterday. You remember yesterday we said, let me use the exact word we used yesterday. The market fell this much. That's a day for yesterday. And we said this is actually companies, right? US 100 is 100 companies. You remember when I said NASDAQ, National Association of Security Dealers Automated Quoting System, NASDAQ, right? So we said this fall you're seeing here is actually what's it called now? It's actually losses for this company that the following day, that was yesterday, that is going to recover from those losses. Sir, did it recover or not? A lot of recovery, right? Don't joke with US 100. So it did it recovered. So I think it was at this particular level we said you can scalp in with a buy, right? You can scalp in with a buy. You can scalp it. So let me see whether you made some profit from that US 100. Did you make some profit from the US 100? Okay, sir, what is the best loss size for a trader with 100K to trade currently? To trade currently? No, to trade currency. I think you mean currency. To trade currency only and be profitable. What is the best loss size? Let me see. Okay, you have 100,000 naira. First of your 100,000 naira is very small because if you convert that to dollar, because the market, the underlying currency traded on this market is still dollar. So if you can convert that to dollar, that is somewhere around I think $60, right? If I'm not mistaken, 60 or $65. Oh, excuse. Oh, let's just call it $68, right? So if you are trading with $68, then that's a small money. Mm. Mr. Akim, that's a small money. So and you're asking the best lot size. I think 0.01 should be the natural lot size for that amount. Like I told them in class, it should be the natural habitat. So 0.01, sir. Because you're going to place a trade and have a stop loss and have a take profit. And perhaps you'll be trading more than one instrument. Maybe you'll be trading two trades, right? So 0.01. So by the time you're trading two trades, it's already 0.03 for your $60. Hmm? Uh, so is it that there's nobody that made some profit from this year's 100 years? Okay, so that means we'll just analyze it and you guys will not take action. So US 100 have been able to recover, right? So, okay. Maybe because of the capital base, you can do more deposit now, fund more, put more money into your trading accounts, let your account be robust, then you can now trade US 100, right? Okay, so I think let me leave US 100, right? So for today, what are we expecting? I'm still expecting upward movement. I'm still expecting upward movement. You know why? I think we have actually make this liquidity down here. Remember this particular level. We have make this liquidity at this level. So this high is the target high, or if you like, target liquidity. This high, the target high. So for today, the market should be able to take out yesterday's high and of course take out this side. Maybe not, it may not achieve all of that for today. Maybe on Monday next week, Monday, Tuesday, it should be able to take out this high and take out this high. So I'm still expecting an upward movement here. So guys, you said we should do gold, right? So let's look at gold. I think gold will be the last instrument, right? The last instrument. So gold instrument gold. Are you guys set? If you're set, I'm set. So let's look at the H4 time frame of gold. So what can we see on the H4 time frame? So take note, this is multi-time frame analysis, or if you like, multiple time frame analysis, right? So the reason why we try to look at the higher time frame or bigger time frame is we want to have an idea what the big boys are doing. Remember, the market is divided into two, big money and small money, right? So we want to have an idea what big money is looking at, right? What big money is doing. So guys, so we have an idea what they think, right? Their thought processes. What are they thinking of? Where are they pushing the money? Where is leverage fund thinking of going? So guys, it's actually strongly pointing up, as you can see, strongly, right? So having said that, for day traders, all of these small red candles are very big profit for them. Day traders, are you in the house? So guys, this is the level to beat, and the market has tapped the liquidity at that level, right? So this is the level to beat. This is the high. This is relatively equal highs. Destination for liquidity, and the market did that exactly. As you can see, this long spike you're seeing here, man, it's dangerous, man. It took out all the liquidity resting above this level. So the market have destroyed this high. And then not only destroying this high, it has created new possibilities, right? It has created by new possibility, I mean new fresh baked liquidity without the resting above this high. But then it shows that the market has more potential to go up. Guys, it shows that the market has more potential to go up, right? More potential to go up, more potential to go up. Okay, but then is the upward trend still valid? Of course, it's still valid, right? So this is the last known strong low, right? Last known strong low, responsible for destroying these highs, responsible for destroying these highs before we created this new high. Guess what? After that high, this low, this level, let me expand it further, created a low, and this low took out this high to form a new high, even though this one is a liquidity movement, right? Okay, so that means if from one of these guys, we are still going up, but the market needs to do some level of retracement, right? Some level of retracement. So all of this diagram I'm drawing right here is to show you the possibilities in the market and the potential direction of the market, guys. It simply means even if the market, take note of what I'm saying, even if the market drops to this level, guys, it does not change the mindset that the big boys are still looking at it going up, right? Because guess what? We are gradually forming what we call a range, all right? And those that will make profit from the range are those that sight the range very early, satisfy me early, oh Lord. So those that sight the range very early, so this actually a range. So I'm expecting, so the market may drop, and then even if it drops, guys, I'm expecting a further movement upward like this. So sometimes when we use arrow to draw like this, now it's not 100% of the time that the market will move exactly following that arrow. Yeah, boy, if the market moves exactly following that arrow, then it means I am not just analyzing the market, I am the controller general of the market. I know no single human being have that position, right? Controller general. So I'm going to say this analysis I've just done for you right now. It's actually a long-term analysis, right? Now let's now go to 15 minutes time frame and look at what the market structure looks like, right? So gold is looking like it still need to retrace even further. But then it simply means if gold is retracing, I mean going down, you like to call it selling, right? You say gold is selling. If gold is retracing and going down, it simply means it's hungry for liquidity, right? And the sell side liquidity that it needs to grab. So let's look at the sell side liquidity gold may be looking for. So gold is, if you look at it, gold may be going down looking for it. Let me tell you why I'm saying so. Yesterday we saw this movement, this strong movement to the upside, right? And guess what? The market formed a V shape almost immediately, a V shape coming down, right? And remember, we said the later is stronger than the former, right? So that means this force downward looks stronger. Now, guess what? It actually formed what we call relatively equal lows. Beautiful, man. My eye just seeing this now. That means this analysis I'm doing is not only for you guys. I've just seen something now. Ah, man, I'm receiving this one fresh from heaven. So the market formed relatively equal lows, as you can see, relatively equal lows, right? Relatively equal lows. So what do you think, guys? Let me know what you think. If you have been following this particular analysis, you should know what will happen here. So let me get to the comment section now and wait for your response. What do you think will happen here? I'll just get response for 2 or 3 persons. So the market has formed relatively equal lows, and we know that. Okay, let me check. Let me check. Okay, Mr. Benga. Okay, okay. He say, come down to the low and move up. Who else again? Who else? What do you think may have happened here? We have started drawing our arrows, right? After some time, the market will do all of this. So that is why it's always good for you to always go to our YouTube channel, right? All of these meetings is being recorded on YouTube. Go to our YouTube channel, later watch them again. One time analysis may not be enough. So the markets relatively equal lows at destination. Okay, thank you very much, SS. SS, that is what is showing here as your name, SS. So Benga and SS, you guys are saying the same thing, right? So the market may, so the market uh, may come down to this particular level, tap it. Remember, it's a may, right? It's not that it must, so it's may. The market may tap it, then of course we see strong movement to the upside. So guys, I think let me draw the curtain here. Thank you very much for following us, for joining us again. We did this yesterday, we did this on Monday, Tuesday, Wednesday, Thursday, Friday, Monday to Friday, one solid hour of market analysis. I want to believe you got enough value from this analysis. Going forward, this Christmas will be sweet for you. This season will be good for you guys. Guys, the market will be with you guys. So let me drop my number 09026264507. Emmanuel. So 09026264507. Emmanuel. So save it there, Emmanuel. The market will be with you guys. See you on the next one. Bye for now.